first tick on the index is down almost about 75 odd points. Not a good opening at all for the market.
On the benchmark indices, the Nifty, Sensex, and even the mid-cap index, we're pretty much flashing red and green.
We have the Nifty lower by 27 points.
Look at the pullback which has played out in the markets from 12 p.m. onwards. And right now, the Nifty is almost back in the green, while the mid-cap index is up nearly 0.25%. Gain of 45 points. But compared to the low of the day, which was 17,600, we are looking at a 150-point recovery. A bulk of the recovery, the last surge, came in the 30 minutes.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track the 6 hours of trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. Well, the Wall Street bucks the global downtrend to gain for the third straight session. The sensex gains over 100 points. Financials lead the markets higher. Market breadth favors advances. 5 stocks advance for every 4 stocks that decline. Adani stocks recover for the 6th straight session. All 10 group stocks end in the green after the conglomerate prepaid loans worth more than 7,300 crore rupees. RBI is likely to extend IndusInd Bank CEO Sumant Katpalia's term by 3 years. Banking sources tell CNBC-TV18 that the central bank is said to have found Katpalia's performance satisfactory and is therefore likely to favor the management stability at the bank. His current term ends on March 24th. That's an exclusive. Axis Bank CEO Amitabh Chaudhary tells CNBC-TV18 that the Citi deal was a great opportunity to add an influent franchise, adds that the bank is not looking to raise capital as of now. Indian bond yields hit a 4-month high after US Fed Chair Jerome Powell signaled higher and faster rate hikes. The Indian market also sees inverted yield curve as the short-term bond yields trade higher than the 10-year yields on fears of tighter liquidity in the near term. Well, here's what we have lined up on the show for you. In Market Opinion, we have had Arvind Sanger, Managing Partner at Geosphere Capital Management. And in Corporate Voices, we have Amitabh Chaudhary, the MD and CEO of Axis Bank, commenting on the Axis Citi deal. Well, before we get to that, let's begin with the day's market action. The Indian markets, showed resilience amid the weak global cues. The bulls took charge towards the end of the session to recover from early weakness. Sensex gained over 100 points, Nifty end marginally higher. The mid-caps outperformed. The banks, autos, they showed support, while IT continued to drag. Surbhi Upadhyay joins us to run us through a market wrap. Surbhi?
Well, what can you say? Breathtaking resilience is what the bulls displayed on Dalal Street on a day when the bears thought they really had the upper hand, given the commentary that we got from US Fed Chair Jerome Powell. The market's move has been nothing short of astonishing today. It simply managed to march ahead. The opening gap down was bought into, and there was never looking back. In the process, the market also managed to save a lot of critical levels. The Nifty, for instance, respected the 20 DMA. In fact, it closed very comfortably above that level at the day's high. So the move, by the end of it, started developing a momentum of its own, all on the upside. Banks were pretty breathtaking. For instance, the Bank Nifty managed to lend lots of support in the second half of the session, doing even better than the Nifty. Mid-caps had a great session. The mid-cap index actually was better than the Sensex or the Nifty. The advanced decline ratio was positive throughout it all. So it would almost appear, looking at the Indian screen, that the Fed commentary and all that talk around interest rates never really happened. The other additional kicker for the market really came in from the Adani group, with the share pledges getting released on a lot of the group companies. That was an added sentiment positive. So that entire pack, the Adani stocks, whether it was sports, power, Adani Green, Total Gas, most of those stocks were up and about in today's trading action. And on banking, as I mentioned, obviously the big news was with the IndusInd Bank, the exclusive story that we put out. The market loves the idea of Mr. Sumant Katpalia perhaps getting the RBI's approval for a second term. 5% up on IndusInd, and it really pulled up the entire sector with it. There were many winners in banks, whether it's HDFC Bank, ICICI, Axis towards the end, rather than losers. Kotak was actually the only losing stock out there. Other Nifty winners, you had Bajaj Auto, M&M, L&T. On the flip side, some weakness in technology names like an Infosys. Bajaj Finance had a down session, about 2% lower, and some metal stocks saw a little bit of pressure, considering the global headlines are still a little negative. So Hindalco would be a case in point. On the broader market side, sugar was a very interesting space because there's been some talk of the government perhaps looking at allowing additional exports. Worked very well for stocks like Sri Renuka, Bajaj Hindustan. They were up and about. On the losing side, some weakness in these new age technology names today like PB Fintech, Nykaa or Delivery. Today was a phenomenal day. There's no taking away from that. The one question the market perhaps has to think of is whether a lot of this reaction to the Fed's hawkishness, whether it has been digested in just one day and we move on, or whether it'll play out over the next couple of sessions or not. But for today, absolutely no taking away from the bulls. They really put up a stellar performance.
Well, in market opinion, Arvind Sang of Geosphere Capital Management says that the Indian markets have seen the worst of the Adani crisis.
The reality is that the inflation is proving, and this has been my consistent theme through the last 6 months, that inflation is going to prove to be more persistent. The easy goods inflation came off, but the other elements of inflation are more sticky, the services, the labor, whatever. India's had three headwinds: the global Fed tightening, you've had the China repricing up, which has caused flows to get reoriented, and you had the Adani meltdown. Now, of the three, the Adani worst is behind us. And I think in the long term, I will make a controversial comment, that I think what has happened with Adani will be long-term beneficial for India, including India infrastructure. China's story is looking like China is continuing to disappoint even in its reopening. The reopening has happened, but from the statements from the NPC over the weekend, it's clear that they're taking a much more measured, slower opening approach.
Well, in more market opinion, and this time global, Steve Bryce believes that the Indian markets, yes, we have had a slow start to the year, but he believes from here on, we could outperform the US markets. Let's hear him out.
Our biggest concern is saying, is for another third leg lower for US equities actually comes from that recession risk. So if we do see a recession before the end of this year, then we are likely pricing in too strong earnings, or stronger earnings than we're likely to see going forward, and we could see that third leg coming lower to the US stock market, potentially testing lows of last year and maybe even making new lows. If were in recession by the end of this year, there'd still be further tightening down the pipes coming from financial conditions, generally speaking. And from that perspective, then the Fed, do they really sort of hold stance and leave interest rates where they are as the economy starts to go into a recession? It's going to be a difficult situation when we get there. We were never bearish on India, right? So let's put it in context. So we're overweight Asia ex Japan at the sort of level 2 regional level of equities. And within that, we're neutral India. So we'd expect, for instance, India to outperform the US stock market over the course of the rest of the year. From an India perspective, I think the key thing is that dollar. So if we see the dollar peaking out probably on that growth differential or different projectiles for Asian growth versus US growth, we think that should be quite positive from a Indian market perspective.
Well, moving to the second headline now, the shares of the Adani Group continue to recover. All 10 group stocks closed the session in the green for the 6th straight day, regaining some of the lost ground post the Heidenberger report. The conglomerate prepaid 7,300 crore rupees ahead of its maturity date to release some pledge in some of the shares that it has. As of today, the group has added 33,000 crores of market capitalization in this session, taking the overall market capitalization to nearly 9.2 lakh crore rupees. Vivek Iyer joins us with details. Well, Vivek, the group has prepaid its loan. What's the impact likely to have on the conglomerate itself?
Extremely important development as far as the Adani Group is concerned. Now remember, there was a significant amount of worry in terms of the proportion of pledged shareholding within the group stocks, especially as there was a significant decline as far as the share prices was concerned. However, what's actually happened is that the Adani Group has gone ahead and prepaid over 7,300 370 crore worth of share-back financing ahead of the maturity in April 2025. The payment has been made to various international banks and Indian financial institutions. Now remember, when you're looking at the proportion of the pledged shareholding at the end of the December quarter, Adani Enterprises was close to 2.7%, Adani Ports almost 17%, Adani Transmission 6.62%, and Adani Green 4.3%. Now, with the decline in the share price, the proportion of pledged shareholding actually increased, but with the payment or the prepayment that has been made yesterday, there is a significant decline that will be seen as far as the pledged shareholding in the system is concerned. So, the following companies, the company shares will be released post the prepayment. So in Adani Ports, 11.8% of the promoters' holding will be released. Adani Enterprises 4%, Adani Transmission 4.5%, and Adani Green 1.2%. Basically indicates that there was a spike as far as the pledge holding was concerned, but it's now fallen quite significantly. Going forward, two things to watch out for. Number one, taking into account the prepayments made in Feb as well as March, over $2,000 million of share-back financing has been prepaid, and more importantly, the company says that they are looking to go ahead and prepay all of the share-back financing before 31st March 2023.
Thanks so much for that, Vivek. Well, let's move on then to the third headline today. On to an exclusive then coming in from the banking space. We learned from sources that the RBI is likely to extend IndusInd Bank CEO Sumant Katpalaya's term. Lata joins us with all of those details. Lata?
Yes, usually reliable banking sources are telling us that the Reserve Bank is likely to look favorably at Sumant Katpalaya's performance and give him a 3-year extension as MD and CEO of IndusInd Bank. What the sources tell us is that the Reserve Bank is pleased with his performance, and more importantly, they don't want to create uncertainty at the bank by giving just a 1-year extension. Now, Sumant Katpalaya, the current MD and CEO, has already got an extension granted by the board. The board granted that extension in mid-September, and the current term is about to end on March 23rd. Now, the board's extension has to be approved by the RBI. Expectation is that before March 23rd, the approval will come from the Reserve Bank of India. Analysts are extremely pleased with what we have picked up from our banking sources, that the extension will be granted, because that will mean some kind of certainty and also a bit of approval for his performance so far. So we did see the IndusInd share shoot up. Most people think it's a positive development for the bank and for the stock.
Thanks a lot for that, Lata. Well, time to slip into a short break, but we'll be back in a jiffy and we'll track the other headlines for you. Welcome back. You're still with us on Markets Today. Well, let's run you through the remainder of the headlines that we're tracking for you. The fourth headline today, Axis Bank Managing Director Amitabh Chaudhary called the Citi deal a game changer for the bank. It will help the bank strengthen its position in the Indian retail banking sector and bring more customers under its fold. Now, speaking to CNBC-TV18, he said that the price paid for the acquisition was around market valuations. He added that 97% of Citi's employees will come back to the bank. That will aid in retaining Citi's talent pool. Let's hear him out.
There are a huge amount of cost benefits that can come to us through this deal, because the Citibank franchise was being obviously debited with global costs, both for the corporate overhead and technology support. You mentioned the 1,500 crores as the amount of money we'll spend in transition, but once that goes away, the benefits we can get in terms of reduced costs also will feed into the overall profitability of the franchise. So we are very delighted. We are also delighted by the fact that we closed the transaction 1 month earlier than what we had anticipated. 97% of the employees have come into the fold of Axis. There was obviously also a requirement for express consents across liability products. So only on the express consent of the customer, they have been migrated to Axis. The valuations, whichever way you cut it, at 17.7 to 18.7 times profits, remains very, very competitive. If you look at similar listed businesses in the credit card and the wealth management space, which is the big part of what we're really buying, it will be obvious to everyone that we're not overpaid at all. Actually, our prices are very, very much in zone of what the kind of market caps of some of these companies are. Even though the Citi deposit franchise is only 4.5% of our franchise, I think we should note that it accelerates our journey, improving the quality of the overall combined liability franchise of the two entities put together. It's clearly visible with 10% improvement in our CASA market share. We will improve our overall CASA ratio by 1.5% and so on and so forth.
Well, moving to the fifth headline today, the Indian bond yields hit a 4-month highs as US Fed Chair Jerome Powell signaled higher and faster rate hikes. The Indian markets also saw an inverted yield curve as the short-term yields trade higher than the 10-year yields on fears of tighter liquidity in the near term. Lata is back with us to fill us in with more details on that. Lata?
Today is a kind of historic day for the Indian bond market because there has been a yield inversion, not a very positive thing. Now, yield inversion means the near-term yields are higher than the longer-term yield. The 364-day T-bill yield, which was auctioned by the Reserve Bank, the yield got cut off at 7.48%, which is a 4.5-year high. The last we saw that kind of a yield on the T-bill, 364-day T-bill, was way back in November 2018. Likewise, the 10-year bond yield also shot up. It went to 7.46, which is about the highest we have seen since November of 2022. So that's a 4-month high. Now, yields have surged across the curve because of Jerome Powell's rather hawkish statements. The Fed chairman said that given the strong economic data, yields may stay higher for longer and that they may have to rise at a faster clip, which means a more than 25 basis point hike is possible. That's what the CME Fed Watch tool also is showing, that more people are veering to a 50 basis hike next time the Federal Reserve meets. For India, what it means is that more and more people are pricing in a rate hike in RBI's next meet in April. As well, there is a liquidity tightness that will come in April when RBI returns the TLTRO money. So, there will be a bit of tightness financial tightness in the market, both globally and in the domestic market, and hence the yields in the near-term market have gone up. It doesn't really mean an inversion in India's case. It only means that there is more tightness expected in the near term than in the slightly longer term. But yes, yields are headed higher. No two ways about that.
Thanks for that, Lata. Well, Jerome Powell, the chair of the US Fed Reserve, sent global markets into a tizzy after he cautioned that interest rates are likely to remain higher than the central bank policymakers had expected. Powell said that a stronger than expected economic data indicated that the Fed may need larger rate hikes to temper inflation.
The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time.
Well, moving on to stocks that were making news today, and we begin with a CNBC-TV18 exclusive then. Abhishek Kothari joins us to run us through details he's picking up on Cholamandalam as well as Aptus Housing, Value Housing. Abhishek?
Well, sources tell CNBC-TV18 that Cholamandalam may eye an arrangement offering management control of Aptus Value Housing. So Aptus promoter as well as MD Mr. Anandan has not been able to identify a successor in the family. So Anandan is an ex-employee of Chola and is likely to favor such a deal. It also helps in integration since operationally both are at the same parameter. PE promoters own about 37% stake in Aptus. So an exit at some point is likely, and also the fact that Chola seems to be keen on entering an housing financing segment and Aptus actually makes a good fit. Just to give the maths, gross NPA ratio of Aptus is at 1.44% while that of Chola is at 5.4%. The ROA, return on asset, at 8.5% and ROE at 16%. One of the best return ratio profile that you can see in the HFC or the housing finance companies sector. With strong capitalization of over 79%, this makes a very good candidate to be acquired. We wrote to Cholamandalam, who have responded to us saying that as a policy, Chola does not comment on market speculation. While we have also written to Aptus Value Housing, we are still awaiting a response from them. Back to you.
Thanks a lot for that, Abhishek. Well, Bajaj Auto, that was one of the big nifty gainers today after bullish commentary propped up the stock. Both JP Morgan and Motilal Oswal, well, they had aggressive targets on the stock as they believe the scale-up of the company's electric vehicle businesses could hold them in good stead. Sonia is tracking that. She joins us to fill us in with more details. Sonia?
Thanks a lot for that. As you rightly pointed out, brokerages are very bullish on the scale-up of the electric vehicle business for Bajaj Auto, a couple of new launches as well. And they also talk about how the worst of the export weakness may be behind them. So first, let me tell you about JP Morgan. They have an overweight with a target price of 4,400 on the stock. They talk about how the stock could re-rate in 2023 because of the aggression that Bajaj Auto is showing both in two-wheeler and three-wheeler electric vehicles. Now, in the two-wheeler electric vehicle space, they're looking to ramp up the Chetak volumes to 10,000 monthly run rate compared to about 3,000 to 4,000 currently. On the three-wheeler space, there's a launch of an electric vehicle three-wheeler coming up in April. It has been delayed up until now, but now there's more clarity that the launch could come through in April itself. Exports are likely to bottom out and the domestic two-wheeler recovery has also begun. JP Morgan also talks about how the risk reward is in favor of investors because the valuations look quite attractive at the moment. The stock is trading at 13.4 times FY25 earnings, which is at a discount to its historic multiples. Motilal Oswal also put out a note where they met the management and they talk about the EV scale-up as well. They say that over the next few months, the company is making its entry into the Brazilian market and the upcoming Triumph launch will also be a big growth driver for them. Now, the Brazil motorcycle market is 1/3 of the Indian motorcycle market in terms of revenues, and the upcoming product launch in the cruiser segment from its alliance with Triumph will plug the gap in its product portfolio. Also, they have an aim to reach 17 to 18% market share in the Brazilian market itself. So all of these are triggers, positive triggers for the company, and that's why the stock is the biggest nifty gainer today.
Thanks for that, Sonia. Well, on that note, we'll wrap up on this edition of Markets Today. But before we leave, here is some commentary received on the need for diversity at workplace on the occasion of International Women's Day.
What we need is a mindset change with the CEOs. You need more women-led organizations, but more importantly, I feel you need more men who basically are the champions for women. The CEO needs to break that mindset and say, look, I'm going to be the champion of the woman. She may think differently, but that's exactly what we need for the organization. We need more diversity.
Great thing that has happened is that we have started measuring diversity now as part of the ESG initiative. Good organizations are taking many interesting initiatives. So first, I would say measure, report, and make the board and the CEO accountable for diversity. But Lata, equally, I would say that women have to take charge of their lives